Hey stackers, I think it's time today to talk about one of the most sus banks in the world, JP Morgan, and what they've been doing over the last few months. Last month, JP Morgan was trapped in a massive short position in silver. Now, a short position means that they were betting that silver was going to go down in price. Clearly, over the last few months, it hadn't been going down in price. It had gone through the roof. Their short position was around $13.7 billion. So if silver stayed above $100 an ounce, they were about to incur some incredibly serious financial losses. So what did they do? On January 26th, JP Morgan analysts suggested that silver pricing had peaked and then warned their investors that they expected silver prices to drop to around $50 an ounce. So obviously concerned that they would lose money if silver prices dropped that low, the investors started selling off their silver positions. And as we know, this ended up touching off a price collapse over the coming days that brought silver prices down to around, give or take, $70 an ounce. Then on January 30th, after the silver prices had cratered, JP Morgan sold off their short positions and bought 3.1 million ounces of physical silver. They also gave their precious metals traders just 1 week to shut down their desk in New York and move the commodities desk to, guess where? Shanghai and Singapore. A day later, on February 1st, which was a little over a week ago, JP Morgan revised their silver price forecast for the end of the year from $50 to $75. Then, most bizarrely, they flipped their position on silver from short to long. In other words, instead of betting that silver was going to go down in price throughout the year, they changed their position to say, oh no, silver is actually going to go up in price throughout the year, and not just up in price from $50 to $75, clearly, because today silver is already back up into the 80s, but they were predicting that it was going to go far higher than that. JP Morgan is now believed to hold over 750 million ounces of silver, physical silver, in their vaults. That is more than most countries on the entire earth own in silver. So why would a bank that owns one of the largest silver hoards on the planet, and a bank that is now also betting that silver is going to dramatically rise in price, publicly predict that silver will not perform well this year? It's because they hope that people will hold off investing in silver so they will have more time to buy silver at lower prices. And why would they move their commodities desk with little or no warning to Asia? Well, JP Morgan may understand something that other investment banks currently do not, that the Shanghai Exchange, not the COMEX in New York, will soon become the exchange that prices silver across the globe. Now, you may remember that JP Morgan was convicted of manipulating the gold and silver markets in 2020 and were forced to pay almost $1 billion, that's with a B, as a fine. Clearly, that fine has not stopped them from manipulating the markets. So I think, my personal opinion, that they will likely try to do the same with the physical silver market in Asia. But in the meantime, it's important that we pay attention to not what JP Morgan says, but what they do. And what they are doing now is a major indicator that they believe that silver is not going to remain inexpensive for long. My advice, load up on silver now, as you can afford to without incurring any debt, while the silver prices still remain somewhat affordable. And if you're new to buying silver or gold and you're not quite sure who to go to or who you can trust, please DM me. I'd be happy to share with you the name of my bullion dealer that I hold in great regard and trust completely. Thank you so much for watching, and I look forward to speaking with you soon about silver stacking.